Alright guys, let's break down this 1 minute chart we got here and walk you through what actually led me to enter this trade in the first place. Now looking at the bigger picture here, as you can see, there wasn't much going on during this slow 2 hour grind, but once this sharp nosedive kicked in and started to actually expand, that's when I really began paying attention, specifically watching how price would react once exhaustion set in. My focus obviously increased once I saw this reversal take place down here. At this point, I was particularly interested to see how price would behave if it managed to break structure at the 90,061 level. And here's why that level mattered. If price, I thought, starts pushing up from the bottom, printing higher lows and breaking structure cleanly, without chopping or moving sideways, then that's my first major clue that a genuine reversal may be in play. But more importantly, it would have been a clear signal not to jump in too early. The question here is why? Well, because when the market is in a potential push-up phase like that, chances are it's working to establish more structure, a structure that could lead to a deeper continuation move or even a larger trend reversal. Now, gang, you have to remember that entering too soon during such a phase often means getting caught in noise or false signals instead of waiting for that high quality setup to fully materialize with stronger confirmation. As I always stress, the more structure on the charts, the better your chances of spotting a strong setup, because this is where you'll get, in my view, the clearest price action read. So, in other words, let the chart breathe and observe patiently. Now, as we get back to the chart, as price continued here to push higher, I noticed this bearish order block, a key structural element that often signals an upcoming range containment or a potential repricing. Also, from a technical standpoint, the market, as you can see, had just surged rather nearly 200 points, so it was already looking primed for a retracement. And you know, sure enough, once price tapped the base of the order block, it reversed and began barcoding before moving lower, which is a clear sign that distribution was setting in. And now at this point, my game plan was to apply a buy the dip model, which means I was looking for price to retrace all the way back to the 19,061 break of structure level, retest it and hold, hopefully confirming this way this new area of support. If that happened with a solid bounce, I figured it could present a strong buying opportunity. What further supported this idea, though, was the absence of any immediate, as you can see, imbalance zones below the 61 level that would need rebalancing. In my view, guys, price had no reason to break beneath this level unless a deeper manipulative shift was underway. Also, pay attention to how price, and this is an important detail to remember, in my view, pay attention to how price behaves just below the 120 mark here. We have the pace of the drop noticeably slowing, and it is as if the market is deliberately at this point applying the brakes, carefully avoiding a move below the break of structure level. Now, this kind of deliberate deceleration often signals that smart money is stepping in as in favoring the upside, which I think was a factor that certainly reinforced my long bias. I think that when taken together, the slowing momentum and the price's clear respect, if you will, for the break of structure level at the 61 level strengthened actually my confidence within reason, obviously, that I was interpreting the market's context correctly. However, I have to say that while these technical elements lean toward a long bias, it was the price's reaction to the formation of this bullish order block, as well as the oversold conditions in the context of this mini range here, that really sealed the deal for me. When price impulsively pushed through the ceiling of the order block, it suggested a strong tendency or intent to move higher. That's why I placed my entry just above the 86 level, hoping to catch that continuation with momentum on my side. As you can see, my entry was well timed as price immediately followed through with a strong 3-bar impulsive move. After that, there was some choppy action here, but what stood out was how price consistently held above both the bullish order block and, more importantly, the break of structure level. That continued dynamic of such key levels served, I thought, as further confirmation that I was on the right side of the market with this trade. Now, the first attempt here, following this nice ascending trendline move, came really close to hitting my initial target at the top of this week, but just missed. It wasn't until the second push that I was able to secure that partial exit. Unfortunately, I wasn't as lucky with the remaining micros. They missed the target by just a hair, which means I ended up getting stopped out. By the way, guys, if you found this trade breakdown helpful, make sure to check out my next video where I'll be sharing more high probability setups and actionable strategies you can use if you want in your own trading. Alright, gang, thanks for watching, and as always, hope to catch you all in the next one.